Hello, real estate enthusiasts. So I got a friend sent me a storage facility the other day, and I went ahead and I kind of blocked out a lot of the information about it because I want to open up an OM for you guys. So as you're looking at storage facilities, a lot of the properties I do are mismanaged. I work with the seller directly, but there are quite a few of you who might look on LoopNet or Crexy or any other local MLS site that you guys have where you might see a property listed. So when you see a property listed and a broker has a property, they should have an OM for you guys or a flyer of the property or something like that. So I'm going to take a quick minute. I'm going to walk you guys through an OM, kind of what to look for, what some of the terms and numbers mean. And then try to give a little bit of insight on, some specifics about this property. The property that I'm going to open up is a little bit bigger than I usually look for. And there are a couple of special aspects of this particular property. So kind of just follow along, get the little tidbits here and there, and hopefully you enjoy this video. I definitely would love to actually underwrite and go over, specifics of details of deals for you. So anytime there's a deal you have questions on, you'd like to take a look at, definitely send it over to me. And we can help break that through and break that down. So I'm going to go ahead and share my screen with you guys. You're going to see the Zoom page first because I always forget to switch that out. So let me open it up. Okay. So this is where are we at? So this is a storage facility that we're going to kind of quickly go through. So this, as you can tell, this is a newer storage facility. So as you're looking at properties, you definitely, just like any real estate, I mean, you look at the condition of the property, you look at when it was built, the land that it's on, what value add opportunities you have for, developing something on the property. For storage facilities in particular, looking at the security, the type of access that it has. Obviously, this is a very new facility and it is very well done. And so, there's not a lot of value add in creating other value with like changing the look of it, adding, upgrading the doors, changing the paint, adding security. Obviously, this is a new property, and so it has all of those things already for you. So, like I said, a lot of the properties we do are older and mismanaged, and so they're going to look a little bit different. But I'm going to go ahead and come on down. Obviously, in an OM, you're going to get multiple pictures. You're going to get the location. So I wanted to point out, so it says building size, 122,920 square foot. So like I said, I'm going to kind of break this down. So some of you, this is just a refresher. So building size, that's what that means. So on another page, I might break it down on this. It actually says NRSF, which is net rentable square foot. So right here, they have building size, 122,000 square feet. On another detailed sheet, it's actually, it says right here, NRSF. So that means net rentable square foot. So that means as of right now, they've developed enough of this property that 122,000 square foot of what has been developed is rentable. So net rentable square foot. So all the numbers that you're going off of right now of what is rentable is 122,000 square feet. So the property itself is actually like 650,000 square feet so far that's developed. So what they're saying is, what is that? About 500,000 square feet of the current property is not rentable. And it kind of breaks it down a little bit. As you can see, they have, they've actually are in development or have almost finished development of a couple of warehouses that are going to be rentable. They actually have an on-site manager living facility. And then they have the office. So that's what I'm talking about, like not rentable. So in the middle of development or like office, or some storage facilities, they have like one unit that they have for their tools and, extra spare parts and stuff like that, or where you have like your security system information. And so if you look at a property that's like 300 units, usually there's 299 that are net rentable square foot, because that one is like your office, tools, maintenance kind of area. So you can't, I point that out because those are, it changes your financials. And so this one, they are currently being able to rent 122,000 square feet, but very soon, because they're finishing these warehouses, they will be net rentable. They will be NRSF. So this number will change because they're actually continually developing on this property. So like I said, it's a little bit different. So this is also helpful. So right here, it says in a 5-mile radius, the population is 86,000. So really quick, I'm just going to type this out so you guys know. So when you're looking at a storage facility, this is one number that's incredibly important. So in heavier populated areas, you can look, I personally would look as small as a 3-mile radius, which means your property and 3 miles in every direction around your subject property. So what they're saying is within a 5-mile radius of the subject property is a population of 86,000 people. So what you would do when you're looking at storage facilities, what you do is you take the population and not the population. So you take the square footage of all available storage facilities within a 5-mile radius. So what you're wanting to do is you're wanting to see the current supply. So that's basically what that sentence means. The square footage of all available storage facilities within 5-mile radius. And I'm saying 5 miles because they provided the population of a 5-mile radius. So like I said, if you have a heavier populated area, you could go down as small as 3 miles. Sometimes in unpopulated areas, you do more of 5-mile radius. You usually don't want to get too much bigger than that because people won't drive very far. The larger percentage of your tenants aren't going to drive crazy far to store their stuff. So you don't want to get 10 miles or anything crazy outside of your property because then those numbers just don't really matter anymore. So they did a 5-mile radius for this particular property. I would do 3 miles for my market research, and I'd be totally fine with it. But for right now, square footage of all available storage facilities within 5-mile radius. So you can do this in a couple different ways. I'm not really going to go into this right now. We can go into it another time, but you can go on Google Maps and you can look within 5 miles. You can look at all the storage facilities and you can measure out each building to get the square footage of all storage facilities within a 5-mile radius. There's also a company called, I'm just going to type it up really quick, Radius Plus, that actually auto-populates it. And so if Radius Plus has that storage facility, however many it is, and you can just do a circle on the map and it'll tell you the square footage of current available storage facilities in that area. So it's a pretty powerful tool. It does cost money. And it is a little bit on the pricey side. But if you are investing in storage facilities, then you or your partner should have credit or a membership towards Radius Plus. So again, you take the square footage of all storage facilities, not just what's not being rented, what's not just what is rented, the entire storage facility within that 5-mile radius, and you divide it by the population within the 5-mile radius, which the broker gave to us, which would be 86,000. So this current property has 122,000 square foot of storage facility. So, let's just say there's 1 million, 1 million square footage available. and you would divide that by 86,000. So I'm just throwing out a number, you guys. This is not a number that has anything to do with anything. I'm just wanting to provide an example. So that would equal 11. So what that means is you really want this number to be between 7 and 9. So it's just a number. Basically, it's just the mathematical portion of telling you what the supply and demand is. So when you start getting above 9, it means that there's just too much square footage already available for the population. So you're going to get too much supply and not enough demand. If you have a number like lower than 5 or 3 or 4, then you just, sometimes you don't want to go too small. So you really want to stay between 7 and 9. In higher appreciating areas, 5 and 6 are fine. 11, you're just going to create more risk because there's a lot of facilities already available. But if like, it's just a risk factor. Like, so this particular property is in Utah, and that area is growing drastically. So you could say, that risk, I'm willing to take it because they're estimating to grow their population, 15% every year. So that 11 is going to be a 9 in like 2 years, something like that. So, that's just a number. So like I said, just try to get that number between 7 and 9. And like I said, this million was just a number I threw out there. So that there could be 500,000 of square footage right now. I don't know. So that is an incredibly powerful tool as you're looking at storage facilities. So this particular property has 15 acres. Like I said, it's going to be a little bit different to underwrite in addition to the office section, the live-in section. They have awesome boat storage. So a key thing to look at for boat storage is to make sure that there's enough space for your tenants to come in and get the boats and come out. So like this picture, I'm really not quite sure how they do this, because this boat right here, I don't know how the owner can come in and get that boat whenever they want because this boat is blocking it. And so if this is how they're saying that you can rent out the spaces, then I would go in and measure it myself and be like, no, you actually can't fit boats in like this. So I'm not quite sure what's happening here. One answer could be that they actually rent out this entire warehouse to a boat company. And so they are just storing like their inventory in this warehouse. So with a facility this big and the type of location that it's in, that could be, but that's something that you need to know when you're underwriting a property and you're looking at a property is, if they say we have RV parking and boat parking and we can fit 100 RVs and boats, you really need to go in and measure that out. One thing, what size of RVs are they talking about? What size of boats are they talking about? Because that varies drastically and that will change your measurements. In addition to that, how are your tenants able to back in their RVs and boats? And how are they able to pull them out? So you need a lot of room to be able to have your tenants be able to back in their RVs and boats and pull them out and be able to access them whenever they want. So these are not accessible to me. So like I said, unless this entire warehouse is being rented out, I would highly question what's happening right here because these are all backed up against each other. So like I said, I'm guessing like there's probably more like one tenant renting out this whole warehouse. Right here, it doesn't show cap rate. So this is something, again, that's going to be on you as an investor is to know what your cap rate is in the markets. So the cap rate, I've talked about that in another video. It's basically the return on your money if you were to purchase the property all cash. So like, let's say this property was for $1 million. You paid it in all cash and you had an NOI of $100,000 a year. Your cap rate on your money is going to be like 10%. I hope that math is right. I just did it in my head. So it's NOI divided by the purchase price is your cap rate. Yeah. So I'm not going to verify those numbers. So it's basically if you were to pay for something all cash, and the money that you're making off of it every year, your NOI, your net operating income. So if you're going to put all of your money in, the money you're making off of that every year, what is that return? So that's what your cap rate is. Obviously, most people don't buy everything all cash, and I highly suggest you not to buy everything all cash. But that's basically what the cap rate is your return on your, like, the market, what the market is telling you of what a good return is on if you were to purchase it all cash. So it's not giving us the cap rate. They change per market that you're in and per asset class. So a cap rate for a multifamily property is not going to be the same as a cap rate for a storage facility. So know your market, know your asset class. Okay. So the broker should have an idea. He should have it in here. I don't know why that's not even there. Not having the purchase price is pretty common. He says, market for bid. But not having a cap rate, that's kind of frustrating. So just make sure you give him a call and ask, because he should have that. So obviously this facility looks amazing. It's good to know what type of doors they are, what type of locks they are. You want the gutter system, like I said, what type of access do the cars have? Can they pull their trucks up to them? Tenants want to have access to their facility. So those are great. Shows you, an overview of the location. That's awesome. Obviously, there's tons of value add in this property. So again, that supply and demand calculation that we did is going to be really powerful for this particular property, because this has a 394 units. So it's a massive property, but it's 15 acres. So there's so much potential in this particular property if your supply and demand is there. So obviously, if this is 394 units and there's just already too much supply in the area, you're gonna have to get creative with this other acreage, because if there's already too much supply, then you're not going to really be able to do anything with this space when it comes to storage. So have your exit strategy in mind when you go into your purchase. So I'm going to go ahead and scroll down here. So again, whether you're buying from the seller directly or from a broker, you need to know these numbers. So obviously, if you're getting directly from the seller, they're not going to be as clean, but a broker should have all of this stuff broken down. And if they do not, you need to ask for it. Don't do the work yourself, because that's what they're getting paid for. So unit details. You need to know the size of all of the units in the storage facility. This one has a ton. It has so many available. They have it broken down per square footage. So obviously a 5x5 is going to be a 25 square foot, storage unit, and how many units it has. So right here, it's saying there's 154 units. So I read 394. So I'm not quite sure what that number was, but I was going to say it might have had the RVs. I don't know where I read that. So right now, 154 drive up storage units. So it's telling you how many units in each unit size that there is. So that's awesome. So again, you need to know your market. So there are some markets that 5x5 and 5x10s get sold out like hotcakes. And then there's other ones that 10x10 and bigger is the only way to go. Like they can't seem to get the smaller units rented. So just kind of a little tidbit as well. A lot of the times the smaller units have a higher turnover, because in smaller units, people just have a couple little things that they're trying to, they can't fit in their house. It might be something seasonal. It might be something just a quick. So a lot of times the smaller units do get turned around a lot quicker. That could be why they only have a handful of them. I'm not quite sure. That's an odd number to have 5 units, by 5x5, 10 and 15. But a lot of times the bigger units are going to have tenants that are there for a longer term. Why? Not 100% sure, but that's just the way it is in the industry. So as you can see, they're providing you current rates and new street rates. So another little tidbit. So they say current prices here. All right. current prices does not include tenants that aren't paying, tenants that are paying a different price. So this is just, they could have one tenant out of these three that's paying $50 on a 5x5. So they could be saying, hey, that's the price. But it doesn't mean that all their tenants that are running a 5x5 are paying $50 a month. So just make sure that if you're really serious about this property and you move forward with it, you get the leases and you verify the units versus the prices, because that a lot of times that's what happened. So, and new street rate, this is awesome. You know, this is great, but use it just for a preliminary underwriting tool. So new street rates, the broker is providing this for you. Who knows where he's getting this information? Radius Plus, like I talked about before, they also will show you competitions, the competitors' rates, and kind of a little bit about what the market can handle. So kind of what you can push the rates for. So it is a really valuable tool, like you said, if you're doing storage facilities. But at the end of the day, you're just going to have to kind of roll up your sleeves and get your hands dirty, because you really want to do hands-on market research to look around at the other storage facilities and see what they are marketing their units for and how many they have available. So let's see here, this 12x20 right here. So this broker is saying that the current rate is 175, but you should be able to be charging 225. So they're saying that you should be able to jump that $50 right at purchase. So they're saying that it's below market right now. So true, not true, I don't know. So that's completely 100% up to you. A lot of times owners don't keep up with pushing rents. So there is a little bit of value add there. But you want to look at your competition. You want to look at anyone who's offering a 12x20 and not only what they're marketing that property for, but how many units they have available. So if your competitor has 20 units at their facility and they're marketing them at 225, but they have 10 units available, maybe that's too much, you know, because they're only able to rent 50% of the 12x20s. So you really kind of want to take a look at that. In addition to that, what incentives are being offered? So is there like a 1 month free when you sign up? Is there like no security deposit, which some storage facilities don't do security deposits anyway? You know, what are they offering to get people in at that price? Because that also changes your value a little bit as well. So like I said, I'm not saying any of these numbers are wrong. What I'm doing is just letting you know what to look at and what you need to verify on your own as an investor when you're underwriting this property. So as you can see right here, it's saying the storage and RV total per year is about 1.7 million. And they're saying that as you push rents, and I believe rent out these warehouses. I don't know if these warehouses are actually, oh yeah, they're part of the square footage. So these warehouses are being rented. So that one warehouse full of boats is probably one of these. So you know, it's probably the 60,000 square foot warehouse that had all those boats in it. So that's probably a pretty true consensus. You just want to confirm that because that's probably what was happening in that picture. So anyways, so right here, they're saying that you can push rents and you should be able to, you're projected to make over 2 million the following year. So since we don't have an actual price on this property and the broker didn't give us a cap rate, you kind of need to have an idea of what you'd actually offer for this property. So here you go. So economic vacancy. Really quick before I talk about, you know, what you could like offer for the property and how to figure that out, I'll go ahead and break this down. So they're saying gross potential rent. That means if it was 100% occupied and every single tenant is paying 100% of market rate. So this is the like highest possible that you could make off of the property at 100%. So what they're saying right now is they are at a minus 58%. So this is actually the loss right now compared to the gross potential rent. And so their effective gross rental income is $713,000. So, so sorry, you guys, that's really loud. So that's a really important number to see when you guys are going into offering for this property, because as you can tell, you're like, oh gosh, this property is 1.7 million. And so if you knew the cap rate, then you would just take 1.7 million as your NOI, which that's not an NOI, but if you didn't know what you're looking at, you would say, oh gosh, this property produces 1.7. You would then divide it by the cap rate. If that was like a 7%, that would be your purchase price, and that would be very wrong. So this is incredibly helpful. So what they're saying, economic vacancy is a combination of things. So that's either tenants who are behind on rent. So that's one of the things that it can include an economic vacancy. Could be that it's rented, but they haven't paid in a month, they haven't paid in a week, they haven't paid in 6 months, like whatever that may be. It could also mean the actual vacancy. So like I said, gross potential rent is if it's 100% occupied and everyone's paying 100% of the current rate that they're saying. So this 58% occupancy or economic vacancy is including probably the difference in the current rates versus what they're actually leased for. So the difference, so like the one property, so like this one, they're saying current rate is $50. They could have 2 people paying $30. So that's a difference of $20. So that difference is what could be included in this economic vacancy, so that they can't include it as an NOI because they're not actually getting that $20 because they're not actually at that $50 rate. So again, that's why I say it's really important to look at every single lease. In addition to, this property itself said that it's 95% occupied. So automatically 5% of what could be rented is empty. So economic vacancy is also including that 5% that isn't being rented. So this particular property also has some buildings that are under construction. They're almost done. So I don't know how much is included in this. So this is definitely something that you would just want to confirm with the broker, just to say what all is included in economic vacancy to really confirm your numbers. So, but basically it comes down to this number. Well, let me undo that because you can't read it at all now. So erase. So basically what's happening here is this 713,000 is your effective gross rental income. So this is really getting closer to your NOI. It's not your NOI, but it's actually the rent that you're currently getting from your tenants. So this is the effective gross rental income. So you have kind of the gross like market rent, and then you have the effective, what you're actually getting every single month from your tenants. So then from that, it looks like, so they're going to add a couple of expenses from the tenants in here. So boat and RV service income. So this is something that this particular property offers. And from it, they're making an additional $63,000. So they're going to be able to add that into their income. So these are additional incomes into the property. Late fees, you definitely count those. So these are the late fees. So from the late fees, you can tell that quite a, like this is definitely including some people who are not paying rent right now, because $12,000 in late fees. And I just want to point out again, this is for an entire year. This isn't per month. Okay. So trailing 12 months. So that means that we're looking at the entire year right now. So this is $12,000 in late fees for the entire year. So that's about $1,000 a month. If your late fees are like $25 per unit, let's just say $100 to make it easy. I'm going to do the math in my head. So if you have $1,000 a late fee a month, and you charge $100 in late fees per unit, that's like 100 units paying late every single month. And they said that they have 150 54 units. That'd be 54 people paying in full and 100 paying late. So again, they could be really strict on that. They could say rent's due on the 1st, and if it's not on the 1st, they're applying late fees. They could give 5 days, who knows? So again, that's another question to ask. What is your late fee? When exactly, how long are you giving till you apply it, et cetera, to really get an idea of how many tenants are truly late, because that gives you an idea on the market as well. And how much management you're gonna have to put into the property. Because if they're not paying and you're having to chase tenants every single month, that gets to be a lot when you have, 585 units. So that units is tenants to follow up on. So that gets kind of exhausting. So again, I'm just going to quickly break through this OM. So they have the expenses. So real estate taxes. This can be confirmed on the appraisal district for the county. So you definitely want to look at this. And as you're purchasing a property, so this is $78,000. I don't really know the tax rate in Utah. This seems really low for a property this size, but it's a newer development. So just remember that taxes on land is a lot less. So if they've developed half of this property in 2021, then they are showing real estate taxes based off of the land and not the value add that they've created. So then this number is going to go up a lot after you purchase the property. So you really want to make sure that you are underwriting your real estate taxes and not theirs, especially in a new development. That happens in single family as well, because if you buy from a new builder, their real estate taxes are like 4,000 because it's maybe like 400, sorry, depending on whatever state you're in, like $400. And you're like, that's just, if you don't look at it, you estimate that into your bills. And then when you purchase, the $500,000 property, all of a sudden your property taxes are $7,000 a year. And so you take 400 and divide it by 12, you take 7,000, you divide it by 12. That's a pretty significant difference for your your bottom dollar. So just take that in mind. Insurance, you always want to get your own quotes. It's great that they have it, but again, you don't know if they have a really close relationship with their insurance company and are able to bundle things. So you don't know if that's even remotely close to what you could get. Advertising and marketing, most of the time you can kind of go off of what they have. They have $1,000 a month in advertising. It's pretty good. Utilities, $26,000. Storage facilities sometimes have lower utilities, but this property does have a lot of lights, a lot of security gates. They have the office. Obviously, the property manager has an on-site living facility as well. So I would definitely verify utilities. That seems pretty low. Telephone, internet, third-party management costs, 2.2% is really low, but it could be because they actually are going to live there. So that's awesome. A lot of times you're between 3 and 8%. Again, it depends on your relationship, your location, how hands-on they're going to be, and all that kind of stuff. So payroll, a lot of times that is separate. Merchant service, credit card costs, repairs, maintenance, contractor for the boat and RV service, subcontractor, and your website. So sometimes your website and your payroll can be combined. You can do different things for operations. So again, these are all things you are going to need to operate the storage facility. So it's great that they have it. They even provide you a pro forma. So they're saying that next year it's going to be $100,000 in real estate taxes. Again, that's all great and dandy, but you want to use these numbers as a preliminary underwriting. And if the numbers come anywhere near close to where your risk tolerance is or where your investment strategy is, then you really need to hone in on each one of these pieces and get your own bids and do your own calculations to make sure that it aligns appropriately. So demographics is great to have. Like we said, we talked about kind of supply and demand. So again, this area is a little bit more populated. So you could do 1 mile to 3 miles for your supply and demand number that we went over. This one, your supply and demand number. But 5 miles is always really good. You never want to go 10. Total households, that's great to know. I believe it's like 60 or 70% of all of your tenants are going to be single family home resident individuals. So that's a pretty big number. 60 to 70% of your tenants aren't from apartments, aren't from people moving a ton. They're from people who live in like 2,000 or 3,000 square foot houses, and they just get a storage facility. So, it's nice to know, how many households actually are living in the area. That's just good information for you to have. So, all right. So that's just some quick information about this particular property. Let's, so like I said, it did not have a purchase price. So like I said, this property is going to be a little more challenging because it is 15 acres. And so you will have to add in the value of the land. So there's 7 acres left to expand on the property. So again, if you are looking at this property, you need to make sure that that 7 acres is actually developable, because just because it's there doesn't mean you can actually develop on it. And this particular property is really close to the lake, so which is an amazing location, especially with all the boat and RV parking. But again, you want to make sure that the city is going to allow you to actually develop on all of it if that is your exit strategy. And with that much land, you better have some type of development exit strategy for this particular property. So again, that's great information, but you need to do the research, you need to do your homework, and you need to know, prior to doing that. So let's see. So for this particular property, we don't know the cap rate. We do know that it's actually, let's see here, it's effective. Let me come back down to the actual NOI. So net operating income. So your net operating income is your gross rent minus your economic vacancy. We went over that. So then you're getting your effective gross rent. So this is really what you're able to actually take home. Then they added in other things that they charge for. So there's other services that they provide or late fees that add value. So your effective gross income is $930. So effective gross, that's still not what you're taking home. So your effective gross income is just what the property is producing. And then you have to pay all your expenses. So then you deduct all of your expenses. And so now when you do that, you get your actual net operating income. So this number, just so you guys know, does not include your mortgage payment, does not include any money to your investors. It doesn't include any of that other stuff. So this doesn't necessarily go in your pocket either. So if there's 3 of you, or if you've raised capital, you then have to do the calculation on that piece of it. And then you also need to do the calculation if you have a mortgage. And I want to say, I did a quick thing. This annual debt service was 40. Where did we go? Here we go. So it said 48,000 a month was your mortgage. So that's not great. So the quick calculation, I put the property at $12 million. And we'll go over that. So that might have been a little high. So I was quickly doing some numbers prior to getting on this, just so I could have that available for you guys. But I did it based off of 1.7 million as an NOI, which, like I said, you're going to be hurting very badly if that's what you go off of. So I did that number inaccurate. So your net operating income is 642. So let's just say 643. So your NOI is 633. So let's just say that the cap rate is 6%. So this is Utah. The cap rate is probably a lot lower. But again, I'm not used to Utah, and I'm more used to multifamily in Utah. So and it is a lot lower than 6%. So a storage facility usually has a higher cap rate. So I'm just going to say 6%. So let's say you have an NOI of 633,000, which is what it's saying that it has, and we do it by 6%. That means the property is going to be worth $10,550,000. So I did a property when I did the calculation for the mortgage calculator. I did the property being valued at $12 million with a 15% down, which is a pretty low down payment, but so it wasn't that far off. So if you have, let's just say these mortgage payments are $40,000 a month. So in a year, that is going to be, your mortgage alone is $48,000. So if you have an NOI of $633,000, you pay a mortgage of $480,000. Again, that's just a rough number because I did it off a different purchase price. Then that means your property, your take home is actually $153,000. That's pretty awesome. But that's if you came out of your own pocket for the down payment. And a down payment for a $10 million property, let's say 20%. So a commercial loan, 20% down is really common. Sometimes it can go either which way depending on your bank. So let's just say 20% down. So that means you're coming out of pocket just over $2 million. So if you invested $2 million into this property and we're making $153,000 a year, you are not even making 10% cap rate. So let's see here. You are 2 million. So it would be, I'm trying to show you guys what it would be. Yeah, so you'd be making 7% return on your money. It's not horrible, but just with the risk involved and everything, I mean, that's pretty low. It's definitely higher than, you know, a lot of stocks and different things out there, but that's $2 million of your own money. So if you got investors, then you would have to do that calculation. I'm not going to go into any of that right now, but just take that in consideration. But I will tell you this, this property probably is going to go for more than $10 million. Why? They have 2 warehouses that are finished being developed. So I just real quick before I get off, I want to put this on here. So when you were looking at commercial real estate, it's different than single family because it's not based off of market comps. Each commercial building that you're looking at is a business. And so you were looking at the performance of the business and the income that it is making to compare to what you should purchase that property at. So it's more of the performance of the property. So this property is a little bit different because not only do you have to look at the performance of the property, but you have to take into consideration the 7 acres of land for potential development, for the warehouses that have been developed that aren't producing any income. So those buildings do have value. So it's going to be up to you and the seller to decide how much value you're willing to give those non-income producing buildings. So some people will pay the pro forma rate for properties because they know that they can get them rented out. Some people can't do that risk. And so they'll pay more of what the current building is valued at, just as a building and land. So those numbers are really important because if you're going off of the net operating income, then you're dividing that number by the cap rate. And so it's going to be a bigger number versus if they were able to build a warehouse for $150,000, that is like one flat fee, like flat rate of just building, building materials and land versus the actual performance, potential performance of that business, of what it could actually produce. So those are going to be 2 different numbers that you come up with. And so those are negotiation tactics. Those are things that you need to know. Like I said, if you have other investors on a property, that you need to know their risk tolerance. And so you need to figure out at what percentage you're willing to kind of go in at. So also, this property has a pro forma. Some sellers out there, they say, yeah, this property is doing 642,000 right now, but we're saying that the end of 2022, this is where you're going to be at. So when you buy this property, in 2 years, you're going to be making $1.4 million. You're going to more than double your money. So some sellers out there, they want you to pay based off of what it will be in the future. Is that good, bad, or indifferent? I don't know. That is 100% up to each individual investor for your comfort level, because you are really leaving a really huge opportunity for a huge loss. Because if any of your numbers project incorrectly, if there's some new developments in the area that are happening that you missed in your market research, and so all of a sudden in another year, the supply is too much and you're not able to actually hit this pro forma that you projected because there was so much development in play that you didn't take into consideration, it just leaves a really big gap of a concern of, how well did you do that market research? Which direction is the market actually going to go? I mean, as you can see, if you would have paid pro forma on a property in 2019, in January 2019, if you paid pro forma rates for a property, you'd be in a really bad situation come 2022, because you based all of your numbers off of to continually increase your rent, not the value of the property. I'm not talking about the appraised value. I'm talking about your rent, your income, your actual income on the property. So again, right now, sellers are going either which way. So this property should be closer to $10 million. Well, again, I don't know the cap rate. I based it off a 6% cap rate. There's a chance the cap rate is like 4 or 5. I don't know. And that'll change the number a lot as well. But based off of its current performance and a 6% cap rate, this should be around $10 or $11 million property. But I can guarantee it's probably going to go for more than that. So because of the market and because of the pro forma value add opportunity for this particular property, and a lot of investors out there are willing to pay on what could be and not what is. So myself, I do not encourage that. I do not encourage to pay for things that are not there. I encourage you to pay for actual performance and the actual realities of a property, and hope and invest for more and plan and project for more, but pay for it at its current value. So, okay, you guys, I hope this was super helpful. Again, this was just a quick analysis. I didn't actually go into the underwriting tool for this particular property. I will do that. And any little piece of the OM or anything you guys want to go over, just put in the comments below. Reach out to me. I have my website on here. I have a membership portal on here. You can connect to me in any way. You can also reach out to me on other social media platforms. I really want to hear you guys' questions. I want to answer them. I want to see where you're struggling in your businesses and your real estate investing, because that is what I am doing. Everything around is I'm here to share value. I'm here to kind of bridge the gap for you guys between where you are and where you want to be, and kind of what's missing in between. So comment below, connect with me, reach out to me, and subscribe so you can keep seeing the videos pop up. Like I said, I talk about other people's properties and my own, and I want to create a lot of value and success in your companies, in 2022 and beyond. So subscribe, keep following, and stay on for the next video.